Morning traders, and this is your Dow Jones day trade setup for today. So, what a day of volatility yesterday. Trump announcing extra tariffs, and that immediately put the market into a bit of a free fall. Now, the level that I was looking for a retest was breached quite heavily, but there was a micro level that after that, so we'll touch on that now. I think for now, as I said yesterday, there's a crossover. There's a very good chance of a turn, and we've had a turn. But whether we're going to get more than this is another question. Okay, so if we look where we are, let me just put these daily levels in. And you can see what I'm doing. What I'm doing is I'm taking the fractal levels, and those are my inside tails. Okay, and there's one more there. So currently we're on this level of 26,600. And if we do breach that, then you can expect 26,266 to be the next level. Oscillators are eased off quite nicely. It's sort of a half-decent setup at the moment. Okay, we're far from any Fibonacci levels at the moment. Fibonacci 50% is probably way down here. Now put that in there to there. Yeah, 50% all the way down the bottom here. So there's another inside tail there. Okay, so let's just do a quick review of yesterday and then look at what we can do today. Okay, so yesterday, or day before yesterday, we had the massive move down with the Fed's tariff, with the Fed's decrease in rates. And then through the course of the day yesterday, we had this acceleration to the upside. Now this massive green bar accelerating up with moving averages still so far apart was our first cue. Okay, this level we were expecting something to happen, but we powered through it. But what you need to do when you're looking at these levels is make sure that you have, look at the closest one, which is here. There's the next one there, but the following close one is pretty much right over there. Okay, and it actually pushed further past that to try and come and close this area here. Okay, but if we drill down to the hour, you'll see what I'm talking about. So this first bottom level was a level we were looking for something to happen. We had an exhaustion bar all the way past it. We had a 200 moving average, EMA, and a 200 simple moving average on the hour. And these 200 moving averages on the hour are often adhered to as well. Okay, so what I'm really saying is this first level is where we were expecting people to buy in. But think logically, how do the algorithms trap people who got in here and had a pretty close short? Oh, it's a pretty close stop loss. Okay, they'd look for the next level. They'd look for some kind of an ambush to get in. So the reality here was, even if this was an entry, your stop was up here, which was quite risky. Or what you're looking for is to come down on the hour, look for a better position, and you can see you had this rejection here. You could have taken it on a break of the rejection of the stop above there. Okay, but anyway, whenever you see a massive green, when you see sort of slow stuff like this, then all of a sudden a massive green bar like that, and we're underneath the 200 or moving averages are separate, there's always an opportunity for something to happen. And once we got this, pretty much an hour and a bit later, Trump came out with his tariff announcement and the market fell. Okay, so anyway, what can we do today? I think we've got more company results coming out today, and we have non-farm payrolls today. So to be quite honest, I'm going to just sit and watch the fireworks again today. I do suspect we're going to find a bottom here somewhere. Moving averages separating like this, all the oscillators grouping to the downside. I do think we're going to find some kind of, let's go back to 3 hours, some kind of a base. And you can see there's quite a bit going on here. So Let's just get a bit lower. Delete that one. And I think those are the levels that we need to focus on. So the one that we're at now, and then the following two. So somewhere along here, we're going to find a base. Okay, you can see what the oscillators are doing at the moment on the 3 hour. And even if we look at it on the 4 hour, we've got some significant groupings of the oscillators at the moment. Okay, and again, you can see the 200 EMA and the 200 SMA playing a role on the 4 hour here as well. Okay, so the trend is down, but I do suspect we're going to find a base somewhere along. If it's not here for a short-term move back to the upside, let's just get rid of all the noise so you can see what I'm talking about. So there would be another opportunity for a short, 26,750, and then obviously just make sure we don't have a weekly level here, which we probably will have. That weekly level looking like it's gone, but it may get rejected with non-farm payrolls. In other words, we may close above it on the weekly. So that would be a retest for me. But anyway, this is the next level, 26,270. Okay, that's the next weekly level. That's an area where I'd be looking to buy again. Okay, so anyway, guys, every time tariff announcements happen, this is what happens, and then the buyers step back in, thinking nothing of it. So anyway, I think that's kind of my view for today. Is probably a little bit of downside, probably another stab to the downside, maybe testing this level here before the buyers step in. But me personally, I'm going to continue keeping money in my pocket. This is way too volatile for me at the moment. Sit and watch and learn, and maybe one day when we're big, we can play with the big boys that know how to drive the market like this. Anyway, guys, then that's it for me today. Definitely expect more volatility, and whatever you do, keep the stops really, really tight. Or alternatively, just keep money in the pocket and watch this. And next week, hopefully, we have a trend either to the downside or a trend back to the upside. One of the two is going to materialize, and we want to be on that trend rather than trying to trade the volatility. Yeah. Okay. Anyway, guys, that's it for me today. Hope it helps, and I'll catch you later. Cheers for now.